In this video, we are going to see how we can record the sales return in Sage. As you can see here on 30th of January, it says the sales return of shirts from Mr. James Carter. That means earlier we have sold some items to this customer and now they are planning to return it back to us. This is the finished goods that we supplied and they are planning to return just because they might be damaged or there might be some other reason. Maybe they don't find the quality as good or packing as good. So they're returning some of the items. Now we have the choice, either we can create a new sales return or we can adjust it against the earlier invoice. So this means if we adjust against the existing invoice, that means now the customer has to pay us less amount. Let's say we sold 1,000 shirts to this customer and they are returning 200 of them. So now they have to pay for 800. And that's the most practical scenario where the companies use this. They use and adjust like that. So let's see how we can deal with this in Sage. In the customers and sales section, we have a special area of credits and returns. As you can see here, right here we have it. Click here, click new credit memo, and let's choose the customer. Customer name is James Carter. Let's select the customer. This is it. It shows this customer is over their credit limit. Click OK. And even though if we want to adjust this credit limit, we need to close out of here and then adjust that. So let's leave it right here. We can adjust the credit limit later on. The date of transaction is 30th of January. Due date is automatically set, but make sure it's not earlier than the transaction date. So here in this case, it's March. So that's good. Credit number, if we have any credit number applicable, we can use that. And if this area, the main invoice section, turns gray, that means you can check any pending invoice already entered. So we have the choice, either we can create a new return or we can apply to the invoice. As you can see here, it's mentioned apply to invoice. We can apply the returns to existing invoice. Let's choose this invoice. And in the past, we have already sold 500 items, out of which the customer is returning 200 back to us. So let's mention 200 is returned. You can mention this in the description, this narration, or you can keep it as it is, doesn't matter. The rate is 400 and the total is 80,000. Exactly matches this one. And if you want to just check the journal entry before saving this, click on the journal from the top. And here we see all the entries exactly the opposite of when we enter it in the sales. So when we enter sales, sales income is increased, so it's credit. Now this 4,000 is for income, sales income. As you can see here, now it's debit because they are returning back to us. So sale is reduced. Also, now the customer has to pay us less amount. So what we'll do is we will reduce the receivables. When the receivables are increased, it's debit, but now the balance is reduced, so it's credit. Click OK. And that's how we deal with the returns. Let's save it. So just try this by yourself and I will see you in the next one.